A little more than half an hour now till the opening bell on Wall Street. Joining us now, Sylvia Jablonski, Chief Investment Officer at Defiance ETFs. I think we're going to get some inflation data this week. Sylvia, do you need some cooler numbers to get really bullish right now? Or are you okay with what we saw that kind of threw a wrench in the works a couple weeks ago?
Good morning, Joe. Well, I think the mood of the market is going to be dependent on some of the data that comes out this week. We know that, core PCE is one of the favored measurements by the Fed, and what we get there, that 0.4%, it's going to be hotter than the 0.2 reading, but you have some seasonality there. So I think investors understand that. If it's a lot hotter than that, I think it goes into risk-off sentiment for a little bit. We get some sell-offs, but if it's in line, I think the mood continues, and then you get some bullish sentiment into the market. I personally, remain bullish. I kind of don't care what happens. I care what happens over time. I don't really care what happens necessarily this week on that number.
Is there anything more important than that it's an election year? That's kind of an overriding factor, is it not? It just historically seems to be.
Yeah, I think the fact that it's an election year, that often bodes well for markets. So I think that, you're going to get some volatility in the markets because of the fact that it is an election year. But what's more important than that is what we were just talking about. I think the Fed is kind of number one, whether or not we get rate cuts this year. I think geopolitics are a huge issue, right? We have to see sort of what happens between China and Taiwan. We have to see what happens in the Middle East, Russia, Ukraine, kind of the ongoing spending that goes into all of this too. So those are the potential black swans that could come out of nowhere. But overall, the economy is strong. The consumer is spending. There's a lot of cash on the sidelines, a lot of liquidity that could come back into the marketplace. So as long as we have, a kind of a reasonable election year and the data remains positive, the Fed gives us those 3 cuts, I think we're in a good spot.
Right, it's all kind of related. It's tough to stay really, really tight if you're the Fed during an election year. No one wants to be accused of political concerns, but more often than not, you don't want to err on the side of keeping rates too high. So maybe that portends well for some cuts later this year.
Yeah, I think so. And if we get those, I think if we don't get the cuts, then all bets are off, and you're going to start to see the market pull back a little bit. If we get those cuts, if we get those, kind of 3 cuts at this stage, I think that's great for the market. I think that helps small caps rally. It keeps up the growth rally too.